Okay, hello everyone. I see there's a few of the usual faces, a few of the usual names. Alfred, good to see you. Daniel D, I believe. There's a few Daniels, but I believe it is the same Daniel D as every other week. John B, Noel, how's it going, guys? Peter, how's it going? Very cool. Got the international crew checking in as usual. I see a few fresh usernames there as well. So obviously, a few more extra seats taken up today. Chris, okay, it's good to see you guys. It's been 2 weeks. I see Gabrielle new here. Cool, and that's very good. Yeah, I see a few guys here. Spider. So as you can tell, a bit of a shift in today's title. Everything to do with cryptos and order flow and everything, the price ladder and the evolution. And I think you guys should really stick around for this 100% all the way through, because today I have Alex on, and I know I've been promised to drag Alex onto the stream, and here he is. And what we're going to present is a topic in the cryptocurrency space. And even for people who have absolutely no experience trading cryptos, this I think will be a very valuable sort of insight and talk, because I think we're going to talk about things you haven't really seen before. It's not the sort of the digested and the whole sort of churned discussion topic. In any case, I'm just gonna wait a few more seconds just for the latecomers to roll in, the guys, the backseat crew, when they join in. Okay. In any case, guys, for those who are fresh, for those who are new to Axia, so for those who don't know the drill so far, so Axia Futures is a proprietary trading firm. We trade traditional futures, I guess, in the perspective of cryptos, with a few offices around the world, including London, which is where I'm at now. With Alex. So this is our main HQ. We've got a few more offices around, but this is where we're sort of streaming from. And what else I would like to mention, guys, if you haven't already, any tools, any approaches or sort of interesting things you pick up, and if you're interested to find out more, I highly recommend that you go to the description below and you click on this link, elitetraderworkshop.com, for a free training workshop. And I highly recommend anything that you might find interesting and you want to know more about, visit that link, elitetraderworkshop.com. Okay, in any case, so I see there's very excited people in the chat, so I won't keep you waiting. So today is a chat with Alex, okay? So for those of you who don't know Alex, unfortunately, I won't do a huge introduction of him because we're not interviewing him directly. He's just going to join me for a chat on a lot of things to do with crypto. But just a quick 10-second introduction. He is the co-founder and head of strategy at Axia Futures, and that is a very underwhelming introduction because he's a man of many talents, does a million different things, and he's an all-round very cool guy. So let's see if I can get Alex on. And there he is. Alex, welcome.
Thank you. Thanks, Bogdan, and welcome everybody. And yes, I recognize many faces, and I'm excited to be here tonight. And just finished a coaching call. I had to wrap up very quickly. Every Sunday night at 7 o'clock, we do our coaching calls with all of our junior, senior traders on our desk. Everyone's part of the internal community. So I've just had to move over to that time. So I'm excited. So hi, welcome everybody. And I'm excited to be talking a space that I've been looking at ever since I've got a bit of an anarchist, libertarian personality since around 2011 and 12. And it's been really interesting watching the evolution and how we traded from a futures perspective. So I'm excited, for today. But just wanted people to know is that we're not going to tackle the space from we're going to tackle the space today from a completely different perspective. And we're not even going to dream about discussing, all the merits of this technology, the political and anarchist ideologies of the space, nor the application. We won't even discuss if Bitcoin's going to be topping or if it will be continuing into infinity, because of the potential supply dynamics. So we don't know this is a potential digital revolution, understanding the new digital infrastructure, but none of this is our job. And we here as traders to trade opportunity. And opportunities that fall effectively into our sweet spot. So I'm excited for this call, Bogdan, and and just on understanding of when we will be trading, but what's required for us to trade Bitcoin, and so forth.
Yeah, exactly. So I think, I mean, man, we've got like a gigantic amount of stuff to get through. So, I think, yeah, as you said, I think tackling it is one thing I really wanted to clarify, because you can go on right now and find a million different things, pro Bitcoin from, investment perspective, political perspective. But obviously we're going to be approaching it very much from like sort of a liquidity standpoint, price, trading it from price ladder, that kind of stuff, mainly from the eyes of an intraday order flow trader, which is obviously Axia's specialty and what we do a lot on the desk. So, I mean, that is not a surprise, but just so people understand that we're approaching it from that perspective rather than talking about the intricacies of is Bitcoin going to X price or something.
Yeah, I mean, I think I've got so many personal anecdotes that on a separate discussion. What's been amazing is the last 6 years, especially how the whole community is connected. The internet, how that this global consciousness. Effectively, you can be sold an idea so quickly, and on any global pain point. And I remember the reason I was attracted to Bitcoin was because of some of the decentralized ideology. So when I was looking at 2011-12 after the Cypriot crisis, I was in actually Cyprus, and they started the very first MSC in digital cryptocurrency. But what's interesting is, what does this mean for us as traders, as professional proprietary traders? And I'll be very interested, people who are on on today. I'd love you guys to let us know if any of you have traded cryptos. If any of you and where you've traded cryptos on, and what that experience has been like. But I think through any paradigm shift, we've had the Industrial Revolution, your soft and hard commodities, your metals, all of them were the necessary raw material. So are we in this now digital revolution and the new raw material, your blockchain technologies and that space? But none of that is our expertise. There's I suppose two main things we want to tackle tonight, Bogdan, which is the skill set required to trade anything, and we're going to be looking at cryptos, and I'll be sketching something that I was thinking about last night, and the feasibility for us to trade as a professional trading group, and to protect our traders. We're talking about liquidity risk and all of those features and all of those elements, and so I'm we'll be touching on lots of points.
And actually, this is a good time to bring something up. I think obviously we want to engage everyone in the chat as much as possible. So if you're new to the streams, what we usually do is have a pit stop every so often, and obviously do a bit of Q&A as we go along. So just while we continue on, and I know it takes a while for all the comments to come in, but let us know how you a very brief description of how you got into the space. If you are in the space, in the crypto space in any way, we're very curious. And perhaps, did you approach trading through cryptos only? Like, have you been introduced to trading through cryptos, or were you a trader before on, let's say, traditional futures? I think I'm very personally quite curious on that. So let us know in the chat, and then on our next pit stop, we'll address wherever you guys send us our way.
Yeah, and I see some really interesting chats already that dovetail into something I want to sketch for everyone that we will be looking at with regards to the gold rush of the 1840s, to the internet bubble, to when we went from pit trading to screen trading, and the skill sets that are required, and the early movers, the early adopters, the infrastructure. So gonna hopefully be painting a few images of what our adoption philosophy is before we start trading something en masse, when it reaches a certain inflection point, a certain liquidity dynamics that makes it exciting for us as a firm to deploy our skill sets and our risks in these asset classes, and specifically in the in the digital asset class. Yeah.
Oh, I see a few comments already coming in. Okay, so we got a few guys. Okay, very interesting. So I see we got. Let's see, we got Gorilla Glue introduced trading through crypto, but any of the legacy markets. which is very interesting. A few of the guys,
and that's, Bogdan, on that is we've had a lot of people come, who are joining our next career training program, who started trading through crypto. So it has been this gateway, but started trading crypto, made money, and literally gave back pretty much everything. And it's interesting, that dynamic, and we'll be talking about that in this graph that I'm going to sketch for people to understand, like the opportunity spectrum and skill sets in that space. So I mean, just to let everyone else know, just so how I came across Bitcoin, as I mentioned earlier on, was around 2012, January, when the Argentina was struggling, and people, farmers, or the currency bans, and just seeing what they did in Cyprus when they, anything above 50,000 on your account was either 50 or 100,000 disappeared overnight. And so this whole decentralized ideology and that whole space was exciting, and I remember, and then I started watching this gentleman. If any of you want to learn just on the deeper concepts, a gentleman by the name of Andreas Antonopoulos, incredible intellectual powerhouse. And he got me in it, when I was 2012, 13, I was in Cyprus a lot of that stage. And we were actually working with a university that started the first MSc in digital currencies. And so my like for the natural systems and complex system and type of frontier technologies was fascinating to see this, this asset class, but that I never would think or expect or forecast to see what happened when I started getting messages in 2017 from my friends who are surfers in Cape Town, to yoga instructors telling me about Bitcoin. And that's when I kind of stepped back, and that's why I haven't been able to participate in any aspect, because we focus on our trading. But it's phenomenal seeing that cycle and then just plotting that against history. And that's what we're going to be talking about today, about those skill sets that are required when you're transitioning from an asset class that's met a global identity, and it's made such a move on the conscious, and brought people into trading directly, because it's a price. One of the big selling pictures is, if price moves at an astronomical rate, everyone wants to find out what this thing is. And that's kind of one of the doors that open, and then bring in all the new entrants. And as all new entrants come in, that's another interesting dynamic. But then what happens? And I'll be looking a little bit of history when we went from pit to screen-based traders, when you had certain skill sets come in and then disappear overnight, and then the skilled professional starts making incredible money over time. So, so I'm as I mentioned, we'll be talking two main things, and I'm happy to give a bit of a less. I mean, Bogdan, do you have anything? I'm happy to do a little bit of sketch in a moment, giving a little bit of a high-end view before we look at how we're looking at Bitcoin from a price ladder perspective, an order flow perspective, what we need to see for us to participate, our proprietary traders to participate in the markets.
No, actually, but just before I do that, I think at the chat, actually, exactly as you said, Alex, they dovetailed. I see a few guys here talking about the illiquidity of futures and the bid offer spread and things like that, and that's exactly what we're gonna be sort of moving into later. So I think we can address a lot of these a lot of these questions about, like, how does the ladder look like, or like we got Fox Trader here saying how does the depth look like. So we can definitely bring that in, I think, later. So let's put a pin in that, I think, and then just come back to it a bit later for those guys wondering. But anyway, in any case, yeah. So let's, if you're ready, Alex, we can bring up your sketch, and I believe if this will position us nicely, I think we can make it a bit bigger. There we are.
Hi, and I see Stone, Stefan, Cosman, your futures markets. What's interesting is us as a team, we always embrace new asset classes, provided they tick certain features, and one of those which we'll be discussing, and Bogdan will be showing some of the liquidity dynamics that are important for us as a firm and for our skill sets. So I just want to draw you something. I just want to give a bit of perspective of moves in history, crypto's space, and understanding overlaying skill set with that. So I've never actually drawn on my iPad before in a live stream, so I hope there's no latency or lag. So please be very. It seems already I have a bit of lag. So I just want to sketch for you over here. So I'm going to sketch a. Oh no! Already it is playing up with me. Okay, what I am going to do, I'm going to try another. So Bogdan, if you can just take. I'm just waiting because it seems my iPad has actually shut down.
No, it's okay. I think we pushed it too far. In any case, yeah. So 100%. So I think while it gets set up there with Alex, yeah. So as mentioned, it's one thing. Obviously, look, as a firm and whatever, you got to be got to keep your eyes open to these kind of opportunities. And it's the often sort of repeated question: do we trade these kind of markets and so on? But one thing we'll be getting at you later is, again, does it meet the checkbox of requirements from our perspective to trade? And I think, as someone said, like you already have the issue of, let me see if I can find it here, Gorilla Glue again. Yeah, so I mean, look, it is also in terms of crypto very much true. So volume is very much still fractured and split across multiple exchanges and contracts. And then you have to sort of get an aggregated view. And again, these are the sort of issues we're thinking about and trying to ascertain. This is actually the same kind of issue a lot of the single stock equity traders face also, in terms of having like, I don't know how many different exchanges, but like 10, 12 or something. And that's one of the big advantage of trading, a futures order book, is because you have one global order book and everything is aggregated on there, assuming that one exchange, most of them do have dominance over a certain market. So that's like, that's a key sort of, that's one of those things you don't realize it's a problem until it is, and that changes everything. So yeah, that's one big consideration for us as a firm is, how do we think about order flow in that space? What does it mean? Which, what are the volumes like on different exchanges and so on. So there's so many, so much nuance in this that, yeah.
Okay, Bogdan, I'm good to go.
Yep.
With an alternative solution. So I hope everyone can read my sketch. So I'm just gonna, so what I'm showing over here is I'm showing so this pink line over here. So these are the two main axes. Okay, so this is just time and this is skill level. So but what I'm doing is I'm going to draw it the other way around. Okay, so the skill level. So over here is this is when skill level is low. Okay, and this is skill level as a speculator. Let me just see if I can make this pen just a little bit more narrow. Okay, and this is positive high skill level. Now, if we look at the actual, say, performance of certain asset classes, okay, so I'm going to take certain key points in time. And so what we have over here is, for example, and I'm just going to now, if I just operate here, what I'm going to show you is, for example, looking at the gold rush, looking at when the internet bubble took off in the late 1990s. I'm also going to show you when screen trading, the opportunities. I'm going to actually download this image over here. And so let's just put this here because I am struggling to draw. And I'm going to draw this. This will just be a lot easier for me. Okay. So what you can see over here is this is a skill set, okay? Now here we have the gold rush, the late 1840s. People discovered gold in California. And then all of a sudden, people start coming with, you can just start panning, in the riverbeds, you start finding gold, the first mover's advantage. All of those people who are able to come with very little tool sets or skill sets, just learn some simple panning techniques until the evolution, until all of a sudden the basic opportunities were mined out. And then the skilled prospector, the skilled, miner, the skilled geologist who need to find areas, that started becoming the nature. But what also started happening around the gold rush, they had to start building infrastructure, so with the infrastructure on the Bitcoin side over the last, especially the last 6 to 7 years, with all the, so-called exchanges. So in the gold rush, building a town, churches, all of those, cities, and then we had pubs built around these gold areas. And then all of a sudden, what happened once it started becoming more difficult, and so the skill set, and so I've divided these two little axes over here. So when the opportunity, so this is almost ease of opportunity, and this is when the opportunity becomes more difficult. The professional speculator, the skilled craftsman, the person who knows how to apply himself in the markets, and this is the professional speculator, okay, versus the amateur speculator. So the start of anything, whether you have the first mover's advantage, whether you have a lot of things that if you believed in the concept or the idea of Bitcoin, you didn't have to be a skilled speculator. You just have to have a very deep belief in it, so you could hold back any of those big washbacks. And if you holded it over time, you could do phenomenally well. Now, those people who believed, who'd done their own research, who could foresee a potential, digital revolutions, basically. But us as individual professional traders, it needs to come into a certain edge sweet spot for us to participate in. And that's what Bogdan is going to be showing you in a short period of time. But it's the same in the, in the late 90s and the early 2000s, when the internet rush started happening, when effectively you just had to open up, if you had a first mover's advantage, had to open up an e-commerce store. And when you opened up an e-commerce store, you could, and as long as traffic was coming, you could sell, as long as it was, a good product. But now if you open up that e-commerce store, how are you plumbing your digital highway so the traffic is visiting your website, SEO, social media, and all of those elements. And so you had to be much more skilled to survive. What separated Jeff Bezos, or what separated Facebook from MySpace, when MySpace was one of the first to start trading. And then screen trading, or even before, when it went from pit trading to screen trading, what actually happened when it went all screen trading, you could arbitrage between the exchanges. You could have a very simple strategy, like in the beginning of the gold rush. You could have a very simple panning technique, but because it was just gold lying on the riverbeds, you could just go and harvest gold without having deep skill sets. But if you're the first one to back your conviction, pack your family, pack your bags, head from the Midwest of America all the way to California because of the gold rush that was reaching newspapers. But now these days, through internet and digital communication, things just happen faster, quicker, and more accelerated. And so screen trading was the same, where you could arbitrage that the Bund futures was different prices between one exchange to the other. Okay, and where you were selling Japanese warrants on the one side of the world, and there was just always an arbitrage spread until all of those arbitrages disappeared. The bad brokerage positions that you could see on the price ladder disappeared. And so the traders who haven't developed skill sets, concrete, powerful skill sets, understanding their tool sets, understanding how to approach deep application in themselves, okay, were not able to make money anymore. The so-called easy money started disappearing, and what required, you could still make as much money only if you were a skilled practitioner. So this is what we're always focused on in this little zone over here, is that the professional, when the conditions change, when the professionalism starts coming, a lot of people get into an asset class, like in the gold rush, everyone came in right near the end. The people who came near the end of the gold rush, that's where they struggled, and they gave all their investments and money away. Same with the crypto market. It's the media pushing, getting people excited, hearing your neighbor next door making money in crypto, and then the whole we live in a climate of the fear of missing out, the FOMO disease, And so therefore, that's a taxation on potential future earnings when people give back. But understanding when you do participate, and that's what this stream is about today, is what's going to make us participate as a group of professional traders. And so screen trading, as I said, then that shifted in the back end of the financial crisis. The professionals, I was speaking to our young traders on our desk on Friday, when all of a sudden those kind of simple price little order flow strategies disappeared overnight, simple setups, and now you needed to be a skilled practitioner in the markets. And you can look at sports betting. I had a young grad that joined my team back in 2012, and he played. He was the captain of the St Andrews golf team in Scotland, and he used to make his money on weekends by traveling to golf tournaments that were on when the sports betting market came alive, and they would just make a phone call because the exchange on the sports betting was lagging between. So he could just phone his friend, put on a bet because the prices were always lagging. That then got ironed out over time, and now to be a really effective sports betting practitioner, you have to have the speculator skill set. That is a trained performance pursuit. It's things that we always focus, in training all of our traders, training all of our grads. And then we've had, one of the most incredible phenomena, maybe potentially, and I don't know. I mean, this stream is about how we adopt asset classes. So this could be crypto, this could be, trading Brazilian bonds as a team that we looking at going forward as well. But now in this stream, we're looking at, well, what is it that's going to allow us to trade crypto? And so when this crypto spaceship took off, the first movers advantage, people who trust you pretty much to make money, you need to have belief in the idea, the decentralized network. I lost interest because I was always a decentralized bit of an anarchist. I lost interest when I found out, 80% or 70% of coins. Now I don't know how true this is, but I don't know why I just switched off overnight. 70% of Bitcoin is mined by 2 Chinese miners. And I said, well, that doesn't sound very decentralized, does it? And so from that, from the people moving forward, but once Bitcoin starts moving sideways, digital currencies, all those ICOs, the initial early adopters, like in the dot-com boom in the late 90s and the early 2000s, or when we transferred to screen trading, when all of a sudden it starts requiring higher levels of skill sets, meets certain requirements that we want to trade. Well, all of a sudden it needs to fall into this area, which is the professional speculator. Okay, so what does a professional speculator look like? Well, this is our job. This is the business. This is part of, the most important part of our business is developing traders so we can have this team that can profit from various asset classes. And my gosh, we are looking at the crypto space, but there are very many things that aren't hitting the point just yet. But like anything, when our traders were hardly trading just oil and gold, 2 products that have probably been some of our most profitable trade setups, technical trade setups of the last couple of years, versus years ago it was just the German bond curve and the Euro stocks and the DAX and the S&P 500. And so we're always wanting to push frontiers, looking for these new asset classes, but they need to meet a certain checklist of requirements. And what Bogdan will be showing today are those liquidity dynamics, which is important for our tool set to understand next movements, the probability, making sure the quality of our decision making is going to enhance the opportunity set that we presented. So all I wanted to show here is that every great globally conscious mechanism, whether the West now colonizing these ayahuasca experiences, or when yoga went mainstream over the last 10 or 15 years, there's all of the things that go through this cycle. And the ones who survive after the maturity or the inflection point of the cycle are the ones who, if you take, the yoga, which it could be any yoga teacher, but the ones who gain the masses, who have people keep on coming back to them for classes because they give them this lift in their physical body, are the good teachers, are the good trainers. And so the same will be in the people who be making money from cryptos in the future, will be the ones who are the skilled professional trader. And so I hope this little sketch made sense, that everything goes through its cycle, where you can just be a gold panning, you can just be panning in the riverbed, versus later on when you need to be a very powerful gold prospector, knowing how to look for certain veins in the rocks to understand that actually here's worth drilling, or here's the opportunity worth trading. And so this is what the cycle and from us, certain parts of the Wild West, because the market, the exchanges, been stories of people where they close out their orders, or they pull all their orders, and people losing a lot of money. We can't take that risk as a firm because we have traders to look after. But there will be that point, and it seems like it's going, where it becomes more structured, and the trading option, and then that's when we start licking our lips as a trading group, and we get incredibly excited to start trading opportunity, because now we've just inherited, or we just received a new asset class into our basket of potential opportunities that we can scan the markets. And crypto futures, I hope, really grows, but the ones who will make money from it are the ones who are the trained, seasoned, professional speculator, as opposed to the amateur speculator. So that's just a big throw there. So I don't know, Bogdan, if you want to move on to, because Bogdan's been working, just so everyone knows, Bogdan's been actually working on a lot for our professional trading arm on sourcing how do we trade cryptos that meet our standards of liquidity, and for our traders to engage in leverage.
Yeah, absolutely. So I think, so that's, that was a very sort of interesting, ongoing experience. But 100%, Alex, especially when you told me, your sort of examples about from the gold rush perspective, or, the professionalization of the trading pits to the screen and so on. But it's essentially, sort of, it literally is gold panning, because the skill and the barriers to entry in that gold panning experience, during the gold rush was just anyone could do it. Anyone could show up, and it's just picking up these sort of easy trades as it were, off the ground. And then the first person to do it gets the, profit essentially. And then it becomes harder and harder and harder. And you go from, perhaps something that worked before so easily in the markets, you just have to have this super multi-dimensional perspective. And this is the kind of thing I keep bringing up in some of my other streams before, you can't have this one dimensionality that a lot of, newbies enter the space, regardless what you're trading, doesn't matter asset class. You gotta go from this one-dimensional, you do one thing, to this multi-dimensional, trader. But anyway, so I think would you like to move then, Alex, into, if it fits in well with what you're saying, into the I think looking at some price ladder material.
Yeah, so let's go, and then we can let people know what our decision process is for adoption as a group. We have many traders. Don't get me wrong. We have many traders who dabble in the cryptos. We've got a couple of traders who've been dabbling for a long time. But talking from the perspective as a group and trading of how we trade, we're always evolving in our space. But how we trade as a group, how we take on asset classes that meet, that meet our edge sweet spot.
Yeah, absolutely. So let me bring this up from here. Okay, and just make this a bit nicer. So I think, okay, so this is one of the reasons I was very curious in the chat to see those experienced, coming into trading through cryptos and only cryptos versus those who may, know about cryptos because they may be traders already or so on. So it depends what path you've taken. And this is why I've sort of prepared this. So, for those who are already trading, shall we say, traditional futures, what you'll see here is literally will be of no surprise. So this is something what we would look at, in terms of traditional, derivatives, futures derivatives on certain underlying markets like the equities. So, I mean, let's just pull out some at random. Got the German bunds here with the sort of in the orange, the Euro stocks, DAX, oil, and gold. And this is what we would call, just 10-second crash course. This is what we call a price ladder, where we watch, which we execute orders through. and also watch something called order flow, which is, as the name suggests, the interaction between participants on the ladder. So for those, if you ever introduce this to someone who's been trading crypto, very interestingly, so, I know several people who trade cryptos, and you tell them, hey, do you look at price ladder and so on? The answer is no. And actually, when I was looking much more into the space, price ladders, order flow was still very much a foreign concept to many, which you'd kind of expect, but also, or it had a very strange appliance. It's sort of like someone saw order flow, saw a little order flow video for 5 minutes, think they understand it, and apply this weird jerry-rigged version to Bitcoin, which or whatever cryptocurrency. So anyway, the reason I'm bringing this up is because this is what a global order book for a very deep liquid market would look like. Okay, so you have very tight bid offer, bid ask spreads, regardless of what price is doing, with the exception of data or like extreme volatility events and so on. So whenever you have something like this, it allows you to get around some of the concerns, which is liquidity. Okay, so entering at market. If you're trading very big size, more importantly, it's not about getting in, but it's how do you get out, when price goes against you, and not having that liquidity issue. And now compare what you see here, just to simplify it. Okay, so compare, sort of the deeper liquidity in a lot of the markets, somewhat, compare, more volatile like oil and gold. But now if I just quickly flick my charts to, so this will have to be a very quick sleight of hand from my side. So let me change over. So I think some of you are very curious on what a ladder looks like for various exchanges. Okay, so this is a price ladder where we've got access here. So on the left, we have BitMEX futures on the June contract. In the middle, we have Bitcoin on Deribit, again, highlighting some of the issue that, you don't have, one exchange, you have multiple exchanges, and that is one of many, many, many different exchanges. And just for reference, just some, Ethereum on the side, but I think the main things you can focus on here. And someone very much, a lot of you mentioned this in the chat. So I think just from memory, I can't remember exactly who it was. You were very curious to see what a price ladder looks like. So here it is. The difference between these two is this. This is the pure price ladder here. I've done nothing to it, and as you can see, the liquidity is night and day. Okay, the way the price jumps around is night and day, and that's one of many, many different nuanced points that I don't want to sort of waste time on. But you can see that there's a huge difference. You can drive a truck through or multiple trucks through this spread. Okay, and what I've done here on this ladder, and someone alluded to in the chat, is when you can incrementally take out prices, so you can see a much more a thicker book as it is, by increasing the sort of the prices. So I've increased it for, I'll just show you manually. So I've increased it from 1, which is like the normal book, and if we keep increasing it, you can see how the book gets thicker and thicker. And what we would try and look at, the thing we're trying to see is, as Alex mentioned, when does the liquidity enter this sweet spot of when the book will literally look like, without me having to put these price increments? When does the liquidity look good enough where it'll look something like this, for just out of random example, where you have a lot of thick, all the way down the bid side, all the way down the offer side, all the way up the offer side, and so on, and that spread is very tight. You have very strong good execution. You can get it in and out very safely with big size and a lot of things there. And from there, because you have the ability for the market to be very liquid, it gives you the ability for it to relay certain information to you correctly through your order flow reading skills, through using footprint and so on. And how does it reach the sweet spot in, how do we use our tools in other markets to approach cryptos? So I see if you guys here. Sorry, Alex, if you want to.
Yeah, just on, this is just showing a few exchanges. And I think a few people have mentioned as well, there's, CME, and I know the micro CME futures is coming out, or is out, or is something that our team will look. But there was certainly, if you had looked at the gold contract and oil, I don't know, 10, 11 years ago, you would not be seeing how it is today. Oil just grew phenomenally over the last, especially through the calendar spreads and that entire space over the last 10 years. And what we have here on the exchanges, and we'll talk about a few things, because for us as a team, we first have to make sure that there's capital safety and security for our traders. So when exchanges go down, if when we're trading, we have a whole infrastructure. We have an infrastructure with our partners, with our clearing firm. If all of a sudden anything goes down for more than 2 seconds, it's a problem, because if traders are highly leveraged, and so the maturity of exchanges of the latency technology is also there. Exchanges and the balance sheet. So these are just a few, before we look at this liquidity now, and how robust and reliable is the infrastructure to facilitate traders, and how solid is the clearing of the infrastructure. Because when you have a team of almost 100 traders that you're providing now a solution, you want to make sure that it can support, just like when we trade our current traditional futures market, and many of those traditional futures market weren't traditional. So, and this is why it's exciting. As the space grows and matures, there will be that opportunity. And that sketch that I showed you, then it will hopefully move into that sweet spot of the risk profile of the seasoned, well-trained speculator. And there's nothing better, when bonds were at zero rates and there was no opportunity to trade for for months on end, the guys were able to pivot to the Australian bonds, the Canadian bonds when they're still rated left in the curve, oil, gold futures, and other markets that offered more volatility, as one volatility crashes in one market. And so if the whole crypto space matures, and we can trade it on seeing the flow of the ladder through all the skill sets that our guys develop. And so one of those very important features is, at this moment, what you see here, what Bogdan has shown here of the various exchange, Terabit, Bitmax, Bitfinance, I don't even know all the names here, and then you see Ethereum over here. There's potentially chart information, if you're trading directly on the chart, but we like to go also on a granular perspective to access our trades even more powerfully. And so from here, it's not yet, but the exchanges are looking at it more. For example, CME, it'll be interesting when the micro CME Bitcoin comes out, the dynamics of that ladder, and how all of a sudden the liquidity, and can you start seeing the activity, and you can start constructing your trades. You can start constructing the trades in them. Then all of a sudden what happens, and this is just the proliferation of opportunity, is once that starts working, then the exchanges or the powers that be start investing more in the infrastructure as the more volume comes in, and that's just the nature of business. That's just the nature of growing. So it's now I do know. I've been speaking to another prop house who designed their entire liquidity operations. They took a first mover's advantage back in 2016, and they built a very solid team of crypto traders. But they took their investment risk. They've done incredibly well, but they've had to invest a couple of million in just because they get constantly hacked by these hackers trying to steal their Bitcoins. And so they've invested. So they obviously took that risk, but as it started, folding, and they started making money just on the long side of Bitcoin, they've been able to grow the interest, and they've got that first mover's advantage. If we were to have invested like that, say 3-4 years ago, designed our own ladder, and there are people out there who have designed their own ladder infrastructure, have an infrastructure where you can most likely see the bid and the sell price. You can, as a skilled futures trader, you can engage in the market with your skill set, and so some of these people who have taken that leap, they are going to get paid, and they probably made tens of millions from that. So, but we've been investing on developing trader the ability to train traders in a process, understanding how we develop skill set, how we develop performance in this performance-based pursuit. And so therefore we wait for when we can be provided with the products, the so-called digital products, and I really hope they do come, because there will be nothing more amazing to have this digital portfolio within our infrastructure to be able to trade. So, but what you see on the ladder here, you can't actually read much what's going on, and then using your market profile techniques and your trades and this to access your idea, compared to the previous page of what Bogdan showed on the charts. So just to go through that, that checklist again, this is the liquidity risk premium is so important, so important for a professional trading group. And so as this matures, slowly will the traders start activating, like gold and oil started becoming mainstay futures products over the last 5 years. And I think one of the years, about 2 years ago, was one of our top 3 products that we traded as a firm, from a P&L perspective. So on the price side, I'm so excited about the evolution of this space, so we can apply and interface our skill set when it almost comes into our edge sweet spot, as Bogdan speaks about. But we thought in today's stream that we'd just show you what it looks like now, why we haven't participated in it now on a price ladder interface, but certainly looking to trade, certainly always excited when exchanges start taking the initiative to try and create products that can display the information that we wish to see from how we look at the market.
Absolutely, and I think I see there's a few questions here on two actually on why we're not looking at perpetuals. Yeah, I mean perpetuals or just the direct futures, but end of the day, the liquidity is still very much dire. The volume is, depending how you look at it, relative to other markets, it's dire or perhaps slightly better. But I would agree that the micros will also go a long way to help the situation, because it's very much it's one of those topics which no one thinks about, especially if you're new to trading, of how much the back end real world constraints affect trading. So for example, how much margin do you need just to have one lot to trade on futures, and that affects the liquidity in the market. And hopefully the micros will obviously, if you follow that logic, will help to alleviate that in terms of market making issues. How do you hedge with the spot and so on, and things like that, and just for just day-to-day traders to come in and participate. The cost per tick is smaller, the margin is smaller, and don't underestimate the nuance and importance of margins, because I think as well, like even in traditional futures, you can see sometimes in highly speculative volatile markets how, for example, in gold, which often has a much higher margin requirement, sometimes when that market gets very heavily hit, or vice versa in equities, you have like these huge moves in markets because people have margin calls in one or the other, and you have the rotation in and out of those asset classes. And of course, that's just a much bigger problem as well in sort of cryptocurrencies as well. So it's kind of like understanding it from what constraints do you have sort of on the non-sexy side. All these margin requirements someone mentioned there. A very, very good point. I'll try and put his question on the screen here. From Quant, a very, very good point. Exchanges do have, need to do a better job of calibrating their tick increments. Sort of synchronization of that, harmonization of this, protocols and all these things are sort of like, as Alex said, like these pre-checklists that you'll need to approach them in how you would approach, let's say, the traditional futures, and that's sort of just scratching the iceberg, basically. I think.
And I think with all of those, the checklist for especially a professional trading group to take on, capital safety and so forth. But there's what is so exciting is what new, if there is this. Now this is now me speculating, and I'm speculating, not forecasting. If that is a separation, is if we are provided with this so-called digital revolution, and the blockchain becomes the new way to pave how Bitcoin, how all these so-called digital assets, the smart contracts, how all the technology and the applications on top of them come into our space. We could be in 5 years down the road when we have access to more of these. They say Bitcoin is the digital gold, Ethereum is the digital oil, because you start building, Ethereum, you can build applications on top of that. So it's the gasoline for other for other applications. And so when you start having the space, and all of a sudden, the techniques that we use to trade correlated markets, when there's a risk on, risk off theme, then you start maybe getting some new stratosphere of digital, currencies and opportunities, where you start trading opportunities in a whole new light, stuff that we can't even forecast now, but it starts becoming a space where we can trade it. How we look at the market, maybe that might change. Maybe the price ladder environment. I was speaking to a really interesting quant tech team, data science team a few years ago, on how to visualize data differently. The price ladder had its, when it first came into the market, it was a whole new way to visualize data. And so the visualization of data can also change that, where all of a sudden you have a more sensory experience of visualization of data, where you're put in this is just super sci-fi, but being put in a room and you see buildings represented by asset class, one building's collapsing, and that market's going down, and you're experiencing from pit to ladder to a whole immersive experience of data visualization. But there could not be anything more exciting. This is a rise of a cross asset class, that when we have to trade risk on and risk off, and the German elections of the new German chancellor that's coming out, and what that implicates in German bond curve and the Euro stocks and the DAX index, or when J&J came out last week that they stopped their trials and we saw the asset classes reacting. Well, imagine when we start getting that news front for digital assets, for these digital currencies, and we have a whole collection of them, because they start becoming the building blocks for the entire digital revolution that's been happening. There's the classic Ray Kurzweil singularity argument, or the exponential growth of technology. And so that is what excites me. Is I really hope that, because us as futures traders, we always want new products that have liquidity, that we can engage with, that we can utilize our tools with, and provided we have those checklists, the safety of margin, safety of capital, then the more products you bring into our universe, the more we can apply our skill sets and put our net across these markets. So just wanted to share that.
Yeah, absolutely. And this is very much like a back-end sort of issue. And I was going to look through some of the questions here. I think it's a nice point to do a little pit stop, Alex. So let me see. I think I saw a few questions here.
Please throw in some questions. Well, it seems like there's a whole, and it's really nice. We love it when people are so. We'll go through some questions now.
Let's see. There's a few people here. Okay, so let me just see if this is the evolution.
And if people have seen any other space that we aren't, because we only been looking into this deeper for our traders only the start of this year. So if anyone has come across a ladder that looks sexy and good like we like to see it, please let us know. Send us an email, because we're ready as a team to move.
This here as well, Alex. So I think this is an interesting thing for us to think through, like just out loud. Do you think CME futures will become the venue that determines price discovery soon, or I think more importantly on this second half of the question, what critical mass is needed regarding volume to get there? So as in, sort of what we're alluding to, like when is the time to strike in terms of, there's enough market making going on, there's enough participants, liquidity, if we were to sort of think through it in the next 2, 3, 4, 5 years.
Yeah, that's a great question, because I remember when Bitcoin first listed on the CME, I think it was in December, and I remember that famous night, and we were all talking about it on the floor. And we were always saying, the moment it lists on, a centralized, one of the biggest exchange on the planet, the moment it biggest futures exchange on the planet, the moment it lists on there, I wonder if all the smart money are going to book I think my earphones are going off very soon. Hopefully not. But hopefully they book their. They most likely will be booking a lot of their profits against the new retail money coming in, and you'd think any listing into a decentralized product in a large centralized exchange is a conundrum in itself. But anyone that's listing it in that space, you would hope that through more participants, more kind of observable liquidity, the price discovery starts happening. And that number, that answer, I wouldn't be able to answer that. But you would hope as more gets adopted by the so-called, authorities, which is against its principles and ideology, but the so-called authoritative exchanges, then you would think it starts becoming more of a mainstay, and that price discovery starts happening.
This may not be an appropriately good comparison, but just if you remember off the top of your head,
Mike. Yeah.
I think Alex may be.
So I'm just switching off. I'm putting on my mic. My headphones.
Okay.
Another set.
No worries. Okay, when Alex gets back, actually, this is one thing I was gonna discuss. Fox Trader. Actually, we'll talk through Fox Trader here first, just to address his question. Then when Alex gets back, so you had a look at the footprint for Bitcoin. Can't make much of it. Can't imagine this is an opportunity. In Bitcoin, charts more useful order flow. Exactly. So this is a few things we're investigating. How do you, and someone alluded to a bit, earlier in the chat about, so first of all, how do you use, especially when the ladder is so, I don't want to say broken, but so, illiquid and so not what we're used to in terms of a liquid market. So how do you use the footprint? And there is the element of, you can scrunch up your prices and you can, get around that. But there are certain plays where you can use your footprint to look at these very, very sensitive areas when there's, a large participant sitting on a bid or offer. But apart from that, that is the big issue. And that is basically what we're discussing about, that the evolution of the market is not there yet to lean on the kind of tools you would from a sort of a nuanced sort of veteran traditional futures tools like a footprint or a ladder yet. And this is the thing I was trying to show with the ladders here, that they look so sparse that you do not have that capability. So, and as Render onto Caesar, I love the username, by the way, says, there's a lot of dumb flow in crypto. And so again, how does that flow change over time? How does the market making change over time? How does the participation change over time? I guess there's no way to know. Probably the way things are moving, it's going to be a lot, sooner rather than later. But it still could very much take years. And actually, this is I believe Alex might be ready to come back on. So let me just bring him on.
I've got the big headset.
Let's go ahead.
And that's really, Render onto Caesar with regards to, the dump flow. If you have developed, we were speaking about in that skill chart of, the early adopters, and then when you go into that professional zone versus the amateur trader, if you have found an arena and a space that you can speculate and you can observe those, arbitrage opportunities, then that's incredible, for today, for our stream is the space of the areas that we trade on. In our arena, we don't have access to that type of opportunity as a group company perspective. But the fact that you've done that is and you can spot edge in that. It's what it's all about, being a speculator, is navigating and moving between different opportunity rises until your edge disappears, and then just making sure how you made money in a certain edge, not being insane, that, Einstein theory of insanity, not keep on throwing the same strategy in an area that stops working, and then you just get back all your money. And that's just what happens with a lot of people who made, so-called money in all these different asset bubbles, or, all these different, not just asset bubbles, these rampant in various asset classes, and weren't able to manage their capital because they never had a risk edge in place either.
Yeah, exactly. And No, 100%. And just relating to this kind of, because just before you had a change of headsets, Alex, is this may not be a very good comparison, but off the top of your head, if you remember, back in like 2001, 2, 3, 4, when you were, baby trader, do you remember what the book looked like in a lot of these super thin, volatile markets, and how long that took to thicken up? Like, because you mentioned gold before, but oil or a lot of these very, volatile products.
Yeah, I mean, I was such a Bund, Bobbles, Schatz, Eurostox monkey for for a long time. But I do remember when I used to look at gold and oil. I mean, there was hardly a ladder, and so those are about. And then whereas markets such as the Bund used to sometimes move in ranges and have 2,000 lots on the bid and the offer, and trade, and guys used to scalp it with 100 lots. You could get in and out like you'd scalp it with a 1 lot. That see flipping patterns and so forth. But yeah, just seeing the evolution and how some markets lock up. You'd have the short end stir markets and certain interest rate markets, especially in Europe. There used to be great price action, but then with the zero rates environment and central banks dominating the buying, they changed. So every asset class has its evolution on liquidity and dynamics. If you are a Japanese bond trader in Japan for the last 15 years, you're probably sitting at your desk all day waiting for one order to go through because the BOJ own that book, they own that order book, and and so all of these have their evolution. You just must be prepared when they start having their time to come, that you are a skilled professional speculator, that you can start trading them. And so it's why we're looking into it, and because we're excited when the ladder that you see now on your screen starts to show a little bit more rhyme and reason in its structure.
Yeah, and just on that, I see Ston as a comment, like, look at the order book from BitMEX, Perpetual, or other ones. Yeah, it's not that bad, but it still has to be way, 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 way better than what it's now. And it's very interesting with that, with the gold and oil example, especially on the oil, Alex, because if you think about it, if the oil futures is underlying the spot, which is oil, which is obviously fundamental to any modern economy for a very long time, if it took that long for a centralized order book derivative to thicken up to provide liquidity, in terms of years, then perhaps as a counter argument, then it could take much longer for a crypto which still doesn't have widespread adoption. And it's easy enough for people who are in the industry to think it has big adoption already, but I mean, it's still such early days that if it took oil futures so long to thicken up, just imagine the kind of demand and participant necessity that's needed in that market because of a real world application. Then
and that's the thing, it's that real world application. Bitcoin, I still don't think it's used much as payments. It's still that speculative instrument. And until people start transacting it, that real world application like oil is, you can say gold really isn't a real world. It's just a psychology. That's why Bitcoin can. But I see some other interesting by Fox Trader, just saying, and by Henrik. I just wanted to see these two questions. Just saying that the other tools like the market profile may be more useful until a book thickens. Absolutely, Fox Trader is this is where the skill set of that that skill set of being a great technician. I mean, market profile is one of our core tools for sourcing those asymmetrical trades as a team. We use it very differently than what gets written on any book. We use it from a perspective of how shape gets designed on the profile. I mean, I love the profile. I'm a profile nerd, but 100% until that book thickens up, you can absolutely trade patterns and plays on your charting structures. It's just for us as a team is when we leverage. We use that when it's time to leverage. We use our profile, and then we use that ladder to know when it's time to leverage. We talk about that in our training workshop, and so yeah. Absolutely agree with you, Fox Trader. And then Henrik, I really like that one. Do you think arbitrage between crypto exchanges could be traded discretionary? I mean, all the discretionary arbitrage trades that I've heard through time. The chairman of our proprietary trading group, a gentleman by the name of Roger Colson, really exceptional mate. He was one of the largest private shareholders of the Life Exchange. seems like there's a bit of a disco going on outside. One of the private largest shareholders of the Life Exchange, and he used to tell me about him buying 3s on Japanese warrants, selling 2s to some other broker on the other side. And yeah, if you find, I have an Irish friend who just goes around the world traveling, looking for little arbitrage opportunities in new little asset classes that come arise. So if you can find any 2 exchanges that are mispriced to each other, I can see him to trade all the. I can understand that obviously the machines, can be a lot more effective and fast, but I think discretionary it can be as well. A lot of people say, can you trade central banks release as a discretionary trader? Isn't the HFTs and the algos? And I always come back to say, our top traders are just the most incredible non-linear pieces of cognitive machinery to be able to simulate a lot of information from different angles, as opposed to a machine that just data crunches a few permutations. Whereas, and that's why we invest a lot in the development of the discretionary human machine. So thanks, and thanks, Fox Trader. So who Fox Trader? What's your? You don't have to share your real name, but it's great that you've just finished our 6 weeks of Richard. I hope you learned a lot during that training.
And to some people here as well, yes, I think micros are obviously, because the CME is global, you can trade them worldwide, but. No, 100%. And actually, this is very interesting, just relating to what you said earlier in the stream, Alex, about the sort of the amateur speculator and the professionalization. It's again the same pattern where, I think you brought this up sometimes. So in other streams, so I don't need to rehearse the whole thing. But my experience talking to a lot of the older guys of how sometimes HFTs can be used as an excuse, but that's just because the skill ceiling has gone from there to there. And now, exactly as you said, you have to be a multi-dimensional, high-caliber athlete. Instead of having, a gigantic desk of guys, you now only best of best, cream of the crop, multi-layered traders survive.
Yeah.
And that will be maybe from the next 50 years from now, those guys will only be the ones, doing really well in the crypto space.
Yeah, it's really, it's one of my favorite topics of conversation. We saw in the London proprietary trading space post, I was speaking to the young guys about this on Friday afternoon in our internal coaching session, and speaking about in 2000, post the European crisis, 2012, European crisis didn't really disappear, for still a long time, but after 2011, 2012, a lot of traders who had made money screen-based from 2001 or early 2000s till after the global financial crisis and the European crisis started disappearing out of this game very quickly. And the default crutch that they all lent into, that it's the algorithms, the HFTs, it's all going algorithmic. Humans don't have a chance. I remember having doing a talk at a conference, the Futures and Options World, a little conference that we had in London, and it was myself with a whole. I was representing the discretionary traders, and we had about 3 or 4 guys came from who on the algorithmic side. And absolutely, if you can, but to understand markets, to build your skill set as a discretionary trader, then I think you can program your algorithms much more favorably when you've got that experience. But the ability to decipher patterns, the ability to operate in a non-linear side. I mean, machines can't even move an arm at the same, casuality as we can. So imagine to optimize, there's all these great buzzwords, machine learning, AI, and because they always get thrown out there. It's always a great buzzword. You're trading algorithmic, or you're trading with an HFT. My machine does AI, and I'm not, I'm never poo-pooing it, but I am representing the other side. I'm representing the ability for a human to spot patterns, understand, a few more levels of depth and permutations, and so this new army of discretionary professional traders, or the guys who were born 2013 onwards, have become monster traders. We've got some of our guys who started back 2012 and 13 become incredibly big traders, where people were saying it was the end of the discretionary outright trader. And so there's nothing but, yes, you have to invest in yourself. You have to invest in your ability to understand how your brain picks up patterns, understand your cognitive faculty, understand how we learn, how we remember. So there's that discipline you need to research to become a more skilled speculator. But there's no reason why you can't use the two together, where you have the data crunching side of a machine to give you alerts in certain areas, but then the discretionary edge of knowing the subtle nuances that you're seeing on the price data because of the experience that you've cultivated to execute and trade incredibly well. And so I am all for the human discretionary click trader. And we've seen some of the biggest, that's just the intraday trader, one of the biggest oil trades of last year that was publicized from, a guy called Pierre Andurant, called it an incredible options, put in these 3 month, 3 month put options when oil's at 60, calling for negative, put on these trades and put on some incredible as a discretionary trader with his own research. And there's another great book called The Tao of Capital of a gentleman in March last year. He just buys these out of the money options, just loses premium for 8-9 years, and then he makes 4 billion. Again, so I highly believe in this, in building this human machine and human discretionary machine, not this, you can develop the cyborg trader in time, but we do believe investing in that element.
And that's just doubling down on what the human brain does so well.
Yeah, absolutely.
Right, of connecting the dots of this sort of multi-layer approach, putting in all this information is what humans can do so well. And it's effectively doubling down. How can we take that 10 times, further, 100 times better? So I don't think, and, to the point where AI can reach the point where it becomes undistinguishable from human in every way, especially if thinking this way. We're hundreds of years away. We're not, as you said, Alex, like when people throw in the AI buzzword or HFT, it's just like one little hammer that can nail something very, with no thought, no context, no discretion, no nothing. It's still such ridiculous early days that it's not even, it's such a conflated topic.
Yeah, and I suppose this is all a separate topic. I know we've veered off a little bit now.
Yeah, so
we're talking on Bitcoin and all of that, but I think I have to slowly venture off. And but I love this session with Bogdan. I know these Sunday sessions will probably start being once a month, because we're going to be focusing. We're going to be focusing a lot on our internal guys. So these the session, deploying our resource, but we'll always share with the community. The people who watch our YouTube channel, we're always putting 2 to 3 videos, 2 to 3 videos a week. I hope everyone enjoyed some of the reasons when we will trade Bitcoin, what's required for us to trade Bitcoin as a group. And I see James here, James Slattery. I think he's one of gentlemen who'll be coming from America to join us maybe in July this year. So James, I'll look at those. So thanks for those questions. And thanks everyone. Just don't forget the importance of being a skilled professional in whatever pursuit you endeavor, whether it's trading, whether it's you go mining for gold, there's been this whole crypto craze, which is this potential, paradigm shift in everything in the world. But in any space, there's no shortcut to mastery. There's an accelerated route to mastery, but there's no shortcut. There's no people who want, I don't know, Iboga and ayahuasca for a shortcut to spirituality. And or the DMT trip. There's a whole host, but that whole journey of mastery is just an incredible journey, and it's an incredible and so if you have lost money on crypto, if you have lost money starting your trading career, just understand it's a process. You don't become a heart surgeon overnight. by reading a few textbooks or attending a few anatomy classes. And so when you're competing with the traders on our desk who've got 10 years experience, tens of thousands of hours in front of the ladder, that's what you're up against. And that's why it's so interesting, is because you can't go and just play a tennis match against Roger Federer. You can't just rock up at a Grand Slam final and play him and expect. Whereas you can open up in a trading account today and compete with the guys that have cultivated years of highly skilled professionals. So you shouldn't expect yourself to be doing consistently profitable until you develop your process, your skill set, and your discretionary system in the market. So I just wanted to close up with that. So thanks, Bogdan. Bogdan is really captured. I'm so happy that we have Bogdan in our team. He's been a firehouse power, and the community seems to be loving you, Bogdan. So thank you for also hosting these Sunday sessions.
No, absolutely, and thanks so much for the guys in the chat. I see a few guys who come in very late, and I feel so sorry for you guys. I think it's of time zone constraints, but I'm glad you can catch certain parts, and hopefully maybe we'll in the long future we can address some of that. But 100%, thank you so much for joining, guys. It's been a pleasure as always. Again, for those latecomers, I'd very much like to say, if you've been interested in any of the tools, any of the concepts, or philosophy of what we talked about, and you haven't already, then definitely visit elitetradingworkshop.com. It's in the description for you guys to see, and you can sort of have a deep dive discussion, a very interesting one from there. But anyway, we'll both sign off, myself and Alex. Good night.
And if anyone, just to finish off, if anyone, our Bob wants the whole COVID, hopefully the COVID arena finishes off soon. If anyone's in London, and we generally have our barbecue season during the summer, normally on Fridays, every other Friday, just drop an email to info@axiafutures.com. We love feeding people, whether you're vegan, a breatharian, as carnivorous as they come. We try and cater for all sorts. So we're a very open door, and so just drop us an email. Okay, have a great Sunday day, Sunday night, Monday morning, wherever you are in the world.
Absolutely. See you guys. Thank you very much.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.